Hello, everyone. So, welcome to the broadcast today. Very much excited for having you once again. And today we're going to be going back to the basics of accounting and do a couple of treatments in relation to that. But I will also be answering your questions for you as well. So, whatever questions you have about whatever anything, just put it in the comment box, put it in the chat box, and I'm going to be reading it out and also answer it for you in relation to that. So, whatever questions you have, put it in the chat box, and then let's get talking and let's get going in relation to that. I believe that you are doing pretty well. Some of you are out of the partial lockdown, others are still in the lockdown in relation to that. But whatever it is, we still got to study, we still got to prepare for our examination, we still got to position ourselves to be able to become successful at the end of all these in relation to that. So, if you have any questions, put it in the comment box, put it in the chat box, and remember to give a thumbs up to this video and also share to invite your colleagues, your friends, and others to come on board so that we can together study in order for us to understand better what we are doing in relation to that. So, like you saw from the title, today we're going to be looking at some basics of accounting, going back to the issue about double entry accounting, going back to how we would do treatments for various issues in relation to that. This has been a question that some students have been asking me over a couple of months now, and today we want to go back to the basics of accounting and look at some of the basics, the double entry, what to debit, what to credit, and that is going to assist you better in the preparation of financial statements, in the treatment of prior period adjustments and other things. Because if your double entry is weak, it means that you are going to be struggle in the treatment of the accounting standards. So it's very important you understand the double entry so that you can better prepare or do various adjustments for the various accounting standards that you'll be encountering in your studies in relation to that. So you're dealing with IAS 16, you're dealing with IAS 12, you're dealing with IAS 13, whatever accounting standard you're dealing with, IFRS 16, all of that. There is something about it that you must understand in relation to what you must do about the double entry in that case. So we're going back to the basis of accounting today, and we are going to be trying as much as possible to be able to look at some various entries and how the various treatments can be done in relation to that. So share the video, invite your colleagues, but most importantly, comment below with your questions for me, and I'll be answering all your questions in relation to that. So you comment below with your questions, and then for those of you who would also want to connect with us or have any questions that you would want to ask us offline or something like that also, then you can call our office line 050. You can call on WhatsApp as 050-114-9296, 050-114-9296, and then the details or of whatever discussion you have will be communicated, and you will be able to get access in relation to that. So if there are any questions, put it in the comment box. Let's quickly do this. All right, so welcome to the broadcast. I see a couple of you joining as well. Whatever questions you have, put them in the chat box, put them in the comment box. I'm going to be answering all your questions for you to assist you. Today we are going back to the basics. We are going back to the foundation of our studies and to look at the issue in relation to accounting double entry treatment. And so that is what we want to look at today. So whatever questions you have, don't hesitate to put it in the comment box or in the chat box. I'm going to be answering all your questions for you. Right. So when it comes to financial accounting, one of the things that is fundamental, or when it comes to financial reporting and by extension preparation of financial statements, one of the things that is critical, that is fundamental, is the double entry. So when you started accounting, one of the things you looked at in much detail was the issue about double entry, how to do various treatments, how to debit what, how to credit what. But as you climb on the ladder, you realize that these foundations are quite weak, or become quite weak for a lot of people, and they are not able to really understand how to do these treatments. Not only that, also, if you are now starting the studies as well, double entry is something that is going to be critical, that is going to be basic in your studies, and that is what we want to look at today in much detail and discuss it much more well in relation to how we can do various treatments, do various adjustments in relation to that. So we're going to be practicing a couple of questions about double entry financial statements, and I'm going to give you the overview and everything you need to know about it, and then we get going in relation to that. So like I said, if you have any questions, you make sure that you put them in the comment box, you put them in the chat box, and I'm going to be answering all your questions for you in relation to that. Now, when it comes to financial accounting, one key thing you must understand is the double entry. Now, when it comes to the double entry, we classify the accounts into various categories. So we have what we call the starting up. We say that financial accounting is the process of collecting of information, recording those information, classifying, analyzing, preparation and presentation of financial statements. That is basically what we mean by financial accounting, and by extension financial reporting. So at the end of the day, we're going to be collecting the information. Now, the key question we ask ourselves is, where does the accountant collect information from? Simple. The accountants collect information from what we call the source documents. All right. So that is where the accountants collect the information from, source documents. So when we say source documents, what are the source document? For example, pay slip is a source document. Purchases order is a source document. Goods delivery notes could be a source document in relation to that. All right. So anywhere invoices is a source document. So anywhere that the accountant is able to derive or collect his information from is the source document. So when the accountant is looking for information to record, he goes first to the source document to collect those information, to collect those details in order to prepare and present the financial statement in relation to that. Now, after the information is collected, the information is going to be recorded. the big question we ask ourselves is, where does the accountant record the information? And that is a step 2. The data or transactions are recorded in what we call day books or books of prime entry. Another name for that is books of original entry. Another name for that is the journals. Okay, it has numerous names: books of prime entry, day books, the journals, or in all that. So when we collect the information from the source documents, we go and record them into the day books. Now, so what are the day books that we have in financial accounting, or for the preparation of financial or for the recording of financial transaction? The first day book we have is the issue in relation to the sales day book. So we have the sales day book. The second thing is the purchases day book. Then we also have the sales returns day book. Then we have the purchases returns day book. Then we have the issue in relation to the journal. And then we have the cash book. So these are the day books that we have. After the transactions are collected from the source documents, they are now recorded into the day books. So let's go through them briefly in relation to that. So the sales day book records sales made on credit. So if the company sells goods on credit, the first place that the transaction is recorded is the sales day book. Okay, so all our sales that has been made on credit will be recorded in the sales day book. Then we come to the purchases day book. When it comes to the purchases day book, the issue about the purchases day book, the purchases day book is used to record credit purchases. So the things that we buy on credit, the goods that we buy on credit from our customers, from our suppliers, that is what is recorded in the purchases day book. So that is the second thing that we look at. So if we buy any goods on credit, like let's say for instance, KK Limited bought goods on credit from Y Limited. So whatever goods we buy on credit, that is always recorded in the purchases day book in relation to that. Then we come to the sales returns. Another name for the sales returns day book is what is referred to as return inwards day book. Return inwards day book. Now, when we say return inwards day book, what does that mean? It means the credit sales we made, some customers may return some of them. Hi, Prince Arno, I believe you are doing well. Whatever questions you have, put them in the comment box for me, and I'm going to be answering them for you in relation to that. Right, so the sales that we made on credit, when customers return part of those sales, it is recorded in the sales returns day book. Like I said, another name for the sales returns day book is the returns inwards day book. Okay, the returns inward day books. So whatever thing that we have returned, whatever thing that we sold to people, and they are returning part of the things, we record them in the sales returns day book in relation to that. In relation to that. So the next one is the journal. Now the journal is used to record opening and closing balances, as well as fixed assets bought on credit. Okay, opening and closing balances as well as fixed assets bought on credit. Now remember, the sales day book here, the purchases day book here is the goods that we are buying for resale. If we buy fixed assets on credit, it doesn't go to the purchases day book. The purchases day book records only goods that we are buying on credit for resale. But if we buy assets on credit, the day book we can use to record that can be the issue in relation to the journal. So the journal does two things. It could be used to record opening and closing balances, or it could be used to record fixed assets bought on credit in relation to that. I think I see a question. Let me look at it. So please, are the fundamentals. So please, these are the fundamentals of financial accounting. Yes, if I get your statement right, Prince Anno, yes, these are the fundamentals of financial accounting in relation to that. Then we come to the cash book. The cash book, like the name suggests, is used to record cash and bank transactions. Okay, cash and bank transactions. That is what a cash book is used for, to record in relation to that, the cash and bank transactions. Now, when it comes to dealing with the cash book, there are, among other things, 3 types of cash book that we can talk about. We have the single column cash book. Okay, single column cash book. We have the double column cash book, and then we have the 3 column cash book. Now, all is based on what the organization aims to achieve in relation to the cash book that is being used. Now, with a single column cash book, it means that it has only 1 column for cash, or sorry, for currency. It means that we only have 1 column on the debit side, on the credit side, either for cash or bank. So either the company is solely cash, doesn't deal with checks, or solely checks, doesn't deal with cash. That is a single column cash book. Then we come to the double column cash book, or the 2 column cash book. With a 2 column cash book, this is where we have a currency column for both cash and bank. So under this circumstance, or under this situation, it means that we have a bank column, we have the cash column, both on the debit side and on the credit side of the cash book in relation to that. Then the 3 column cash book is where discount allowed is included on the debit side, and discount received is also on the credit side. So with a 3 column cash book, we have a column for cash, we have a column for bank, we have a column for discount. But on the debit side, there is discount allowed there, and on the credit side, there is discount received. But the big question we need to ask ourselves is, why is discount allowed on the debit side? Why is discount received on the credit side? Discount allowed is on the debit side because, listen to this carefully, discount allowed is on the debit side because it is when customers are paying us. Now, if customers are paying us, we are receiving cash, so we're going to be debiting our cash book. We will get into that in a moment. We're going to be debiting our cash book. So if they are paying us and we are giving them discounts, it means that it should be in alignment with where the cash received is being recorded. That is why discount received is on the debit side of the cash book, and then discount allowed is on the credit side because discount received is on the credit side because it is when we are making payment to our suppliers that they will give us discounts in relation to that. So that is the issue about the cash book. So these are the books of prime entry. So first, we collect the information from the source document. Second, we record them in the day books or the books of prime entry. So after the transactions are recorded in the day books or the books of prime entry, we go to the 3rd level, and that is the ledgers. The ledgers. Now they are collected, they've been recorded, then they have to be classified into the various ledgers. So the 3rd level is ledgers. Now, when we talk about ledgers, what are we talking about? When we talk about ledgers, what are we talking about? In a simple language, we say that ledgers are books of prime entry into which transaction relating to a particular class of items are recorded. The book of prime entry into which transaction relating to a particular class of items are recorded. So when it comes to ledgers, depending on where you are, ledgers can be classified into personal ledgers and then impersonal ledgers, or general ledger and personal ledger. So depending on whatever school of thought of classification you are referring to, so personal ledgers and then impersonal ledgers. All right, now when it comes to the personal ledgers has to do with the ledgers that relates to individuals, companies in that case. So usually the personal ledgers is going to have what is called the sales ledger and then the purchases ledger. The sales ledger and the purchases ledger. Then under the impersonal ledger, we're going to have the general ledger. So all the information about our debtors will be recorded first in the sales day book. From that, we need to put all the information into a single account so that we will determine how much we owe them or how much they owe us at the end of the day. Because there are times when the debtors are supposed to keep debit balance traditionally, but there are times when a debtor may keep a credit balance, which means we owe the debtor. So we want all the information in a single account. So what do? To get the information in a single account, all the information from the sales day book will be recorded in the sales ledger or the debtors ledger in relation to that. Then the purchases day book looks at all the information about our creditors. So if we want to have all that information in a single account, that will go to the second type of ledger, and that is called the purchases ledger or the creditors ledger in relation to that. So like you can see, the personal ledger relates to individuals, companies in relation to that. Then all other accounts, like the sales returns, like the cash transaction and all other accounts, goes to the third class of ledger called the general ledger, right? So we have the sales ledger for recording all information about debtors, the purchases ledger for recording all information about creditors, and then the general ledger to record all transactions that cannot be recorded in the sales and the purchases ledger in relation to that. So what are we saying? 3 steps so far. Step 1, we collect the information from source document. Step 2, we record them. And where do we record? We record in the day books, in the books of prime entry. And then step 3, those transactions recorded in the day books are now classified into the ledgers, and we have the sales ledger, the purchases ledger, and the general ledger in relation to that. Now, once the items have been recorded in the respective ledgers, the accounts are going to be balanced, and when the accounts are balanced, that is where we will now balance, and that is step 4. So step 4, trial accounts. So all the accounts that we're going to be opening, it is after the trial balance that the financial statements are prepared. So for the purpose of assisting you to understand what we must do well, let me give you a pro forma of how the trial balance looks like, and then we will set the benchmark of determining what should be the closing balances of various items in the class of an entity in relation to that. So trial balance. Now the trial balance usually has 2 columns. We have the debit side, okay, and the credit side. Share it like this. And then we can put particulars or details here, depending on where we want to be at. Now, like I said, the trial balance is where we bring everything together. So the trial balance shows the closing balances. Now, it's very, very important for you to understand the closing balances of various items But the expenses prepaid, so you've paid the expenses in advance. So maybe, for instance, as an organization, we are supposed to pay rent, or we are supposed to pay insurance, and every year we are supposed to pay $1,000, but we have paid $5,000. It means we've paid for 5 years, but we've only consumed 1 year. So the 4 years we've paid more extra represents what? Expenses prepaid. Now that is an asset. We've not consumed the benefit yet, so that is an asset. So expenses prepaid are current assets, and they keep what? A debit balance. So expenses prepaid, they keep a debit balance in relation to that. Then after we deal with the issue about expenses prepaid, we could have other items in general, like debtors figure. Debtors traditionally keep a debit balance or debit balance. If a debtor account has a credit balance, it means that the debtor may have overpaid, or there could be an error. But what it literally means is that the entity now owes the debtor. But debtors generally keep debit balance. Then creditors. Creditors also is a liability, so generally, so you add that there. Then all liabilities also keep credit balance. All income keep credit balance. Okay, all liabilities credit balance, all income credit balance in relation to that. So 3 steps we've discussed so far. Step 1, we collect the information from source document. Step 2, the transactions are now recorded into the day books or the books of prime entry. Step 3, the transactions are now classified into various ledgers for an organization. And then step 4, we now establish or extract a trial balance. So once we have the trial balance extracted like this, financial position, we will have the statement of cash flow, and then definitely we will have the notes to the accounts. So these are the financial statements in relation to that, and chances are you know these already. So this is what you'll really be doing in level 2 financial reporting. When you are extracting the financial statement, when you are doing your accounting standards, you'll be doing this. But these are the basics, the fundamental, before we come here in relation to that. So now that we have understood the 5 stages involved in the preparation and presentation of financial statements, so stage 1, we collect the information from the source document. Stage 2, we record the transactions into the day books or the books of prime entry. Stage 3, the transactions are classified into ledgers. Step 4, we extract a trial balance. And then stage 5, we now prepare financial statements. So when it comes to preparation of financial statements, so before any of these financial statements will be prepared, we have gone through these 4 stages, and the financial statement becomes the final stage we go through in the preparation and presentation of financial statements. So if you have any questions, put them in the comment box, put them in the chat box, so I can answer you in relation to that. Okay. All right. So now that we've gone through these, let's pick a question and see how we can actually do a double entry in relation to that. Let's see how we can prepare double entry in relation to that. So want to pick a question, then we go about it. So let me rub my board and get it ready for us to go. Okay, so I see a question from Prince Ano. Let me look at that real quick. Live chats. So please, do you have ebooks for financial accounting? Prince, I think we should. There was an ebook that we prepared some time ago on financial accounting. So possibly there could be an ebook that we could make available in relation to that. Right, so let's look at some transactions and how we can do the various double entry in relation to that. So I'm going to read out the transaction, then we look at the accounts that we are going to be preparing. Now, usually this is like the various T accounts that we are going to be preparing in relation to that. So number one, owner puts €1,000 cash into the business. Owner puts €1,000 cash into the business. So let me just divide my board into two. So, or maybe into three. We don't know. Into three could be better. Let me do it a bit even. This and then that. Okay. So what are we told? Owner puts €1,000 cash into the business. So if you are starting a business and you put €1,000 into it, what is that? That is your capital. Okay. Now it is cash you are putting into the business. All right. It is cash you are putting into the business. So since it is cash you are putting into the business, it means that we are going to be opening the capital account and then what? The cash account. Does it make sense? Capital account and then the cash account, because anytime you are starting a business, anytime you are putting your money into the business, that goes into the capital account. So we're going to open the capital account. So T account here. Remember I told you this is going back to the fundamentals, right? And then the cash account. You good? Now we're dealing with the euros. Is that euro or pound? I think this should be this pounds, sorry. This pound. So £1,000. Now, so what do we do? Owner puts £1,000 cash into the business. So note that, remember what I told you from the trial balance. Capital account always keeps a debit balance. So what do? We debit the cash book and then credit the capital account. Okay, so we debit cash book in the name of capital, 1,000, and credit the capital account in the name of cash, 1,000. I hope you are getting the double entry. So anytime you are starting a business with an amount of money, you're going to be debiting, you're going to credit the capital account. Now, assuming this money was deposited into the bank, we wouldn't have opened cash account, we would have opened what? The bank account in relation to that. 2. Business buys goods value at £800 on credit from X. Business buys goods value at £800 on credit from X. Now remember what I told you. If you buy goods on credit, that is a debtor. All right, that is a debtor. So we're going to be preparing the debtors account. So X account, the person from whom we bought. Okay, then because we are buying goods, we will prepare also the purchases account. Assuming if it was an asset we were buying on credit, we would have opened the asset account in relation to that. So now, bought goods on credit. You see, the rule for personal account is that we debit the receiver and credit the giver. Okay, we debit the receiver, and now I was saying data. No, it should be creditor rather, because we are buying, we are not selling, we are buying. So it should be creditor rather. So when we are buying goods on credit, we debit the receiver, credit the giver. That is the rule for personal accounts. So in this context, X is giving us the goods, so we credit X account because we debit the receiver, credit the giver, and we are receiving, so we debit our purchases account. Also, creditors always keep a credit balance, and the purchases account always keeps what? A debit balance. So we debit this in the name of X. How much are we buying? 800. And then we'll credit this in the name of purchases, 800 pounds in relation to that. I hope you are getting the treatment very well in that case. Number 3, business sells goods on credit to Y for £100. Business sells goods on credit to Y for £900. So now the business is selling. So if the business is selling, that is going to be a debtor because we are selling on credit. So since we are selling on credit and it's going to be a debtor, what do? We open the debtor's account. Going to be chipping that here. So that is going to be Y account. So Y's account. We introduce our currency symbols or signs in relation to that. Then we bring the second thing in relation to the sales account, because now we are selling some things. I'm just trying to make sure that now you in your book and in the example you got to be a bit spacious. Okay, I am just trying to be quite economical with my board here, so I can leverage on what I'm doing better in relation to that. Now we are selling. What did we say? We debit the receiver, credit the giver. This is also a personal account. So we are selling, and like I told you, sales account always keep what? A credit balance. So what do? We credit our sales account and we debit Y's account with 900. So debtors keep debit balance and the sales accounts keep credit balance. So that is the treatment for this transaction in relation to that. Then the next item, four, business pays 750 cash to X. Business pay 750 cash to X. Business pays 750 cash to X. Now, if you remember, we bought from X some time ago, 800. So now we are paying X 750. So if we are paying cash, what do? Money is leaving our business. So if money is leaving our business, it means we have to what? Credit our cash account. So we'll debit the receiver, credit the giver again. So we'll credit our cash account because money is going out, and then we'll debit X account because X is receiving the money. So cash 750, X 750. I hope you are getting the treatment. So that is how we go about that. Next one. Business receives £900 cash from Y. Business receives £900 cash from Y. So what does that mean? Remember we sold to Y some time ago, £900. So Y is now paying us that money. So if Y is paying us, it means money is coming into the business. So if money is coming into the business, what do? We debit our cash book. So since we debit our cash book, then we'll credit Y's account, the one paying. So we debit our cash book 900, and we credit Y's account in the name of cash 900. So that's how we go about the treatment in relation to that. Then we go to the next item. Business sells goods for cash. Business sells goods for £100 cash. Business sells goods for £100 cash. So we are selling goods for £100 cash. So what do? Sales, but this time around we are not selling on credit. Money is coming into the business. So what do? We debit our cash account because we are receiving cash, and then we credit the sales account. Okay, so sales, that's 100, and then we credit the sales account in the name of cash, 100. I hope it makes sense. Next one. Business buys goods value £200 from X on credit. Business buys goods value £200 from credit. What do? Pause the video and do the entry. So since we are buying again from X, X is our creditor, and so we will debit our purchases account because we are buying goods, and then we'll credit X account because we are buying it on credit. Okay, so purchases, that's $200, £200, and then we'll debit the purchases still in the name of X, £200 in relation to that. Next one. Business pays $220 cash to X. Business pays $220 cash to X. So we are paying X again. So what do? We credit our cash account and debit X account so that X will receive the money. So what do? X, 220, and then cash, 220. Make sense? Then the next one. Business puts $500 cash into bank. Business puts $500 cash into bank. Now, this type of transaction is what is referred to as Contra Entry. Okay, this is the type of transaction that is called Contra Entry. Now, what does that mean? It means a transaction that is affecting both cash and bank at the same time. So one current asset component is reducing, then another current asset component is increasing. So let me open our bank account right here. Remember, I told you I'm trying to manage my space. Okay, so let's see what we got in relation to that. So we open the bank account. We open the bank account. So if we are opening the bank account like this, what do? We are taking the cash to the bank. So the bank is receiving. So we will debit bank, okay, and then we'll credit the cash account. How much are we taking to the bank? £500. So we credit the cash in the name of bank, 500. Then we debit bank in the name of cash, 500. That is the concept about that. That is the concept about that in relation to that. Then the next transaction. Owner takes £30 out of the bank for his own use. Owner takes £30 out of the bank for his own use. Now, when the owner of the business takes part of the money out of the business, what does that mean? What does that mean? It's called drawings. It's called drawings. So he's taking the £30 from the bank account. So the bank account will reduce. So we credit the bank account, and drawings always keeps a debit balance. And so we open the drawings account. Right here. We open the drawings account. So if we are opening the drawings accounts like this, what do? We are opening the drawings accounts like this. What do? Like I said, you credit your bank, you debit drawings. So drawings, £30, and then bank, also 30 in relation to that. So that is the transaction. These are the items that we are supposed to work on and look at in relation to that. Let me see if that is all the items. Yes, that is all the items for this question. So once we are done with this, what we do is to balance the accounts. Okay, what we do is to balance the various accounts, and then we can extract probably a trial balance if we want to. So to balance the accounts, you close the accounts, and then you look at the debit side, the credit side, which one is bigger. Certainly only 1,000 we have here, and so the balance carried down will be here as 1,000, and the balance brought down will come here as 1,000. That is why I told you that the capital accounts keeps what? A credit balance, because when you balance the accounts, the brought down is the closing balance, and it's always on the credit side. Then the cash traditionally is supposed to have a debit balance, okay, because it is an asset. So let me bring this a little bit. Is that better? Okay, so if we check, we add the debit side, add the credit side to see which side is bigger. I think the debit side is bigger with £2,000. £2,000. So the difference will come here as balance carried down, and this is 1250 and 1470, and so 1470 from 200 will be 530, I guess so. So the 530 becomes the balance carried down, and that goes here to the debit side as balance brought down, 530. So the cash, like I said, always keeps what? A debit balance in relation to that, because it's an asset. Nonetheless, you can be preparing or solving a question and then the cash has credits. Like it's insane though, but it could be. Then we balance excess accounts here. So if you check it out, which side is bigger? This is 1,000, this is 1,000. Oh, it's balanced. So we don't owe X. Hey, it's not balanced, sorry. We owe X still. This is 970 and this is 1,000. So 1,000 here, 1,000 here. So balance carried down will be 30. Balance brought down is 30. Now remember I told you that creditors keep a credit balance. So it is having a credit balance of 30, meaning we owe X 30 as at the end of the year under consideration. For Y's account, that is the debtors account, it's the same on the debit side, the same on the credit side. So it has self-balance, okay? It has self-balance, so we don't do anything about it. Then we come to the bank account and also balance the bank account. Now, if you check the bank accounts closely, you realize that the debit side is bigger. So we bring the 500 as the basis for the balancing of the accounts. And then the balance carried down will be on the credit side. And that's going to be 470. And then the balance brought down will be on the debit side in relation to that. So balance brought down 470. So your bank account traditionally is also supposed to keep a debit balance, meaning that you have money in the bank. But if the bank account has a credit balance, that becomes a liability. Okay, that becomes a liability. So in the statement of financial position, that is the balance sheet, we will take that to current liability. But traditionally, you're supposed to keep a debit balance as part of the current assets of the organization. So that is also about the bank account. Then we come to the next one, and that is going to be our purchases account. Now, in our purchases account, you realize that nothing usually comes to the credit side. So we're going to just close it up like that. And so that's going to be 1,000 and 1,000. And then the balance carried down will be on the credit side, 1,000. And the balance brought down will be on the debit side, 1,000. So you realize that our purchases figure is what? 1,000, because that is what we bought during the year under consideration. Then we come to the sales account. Now, remember I told you the purchase account keeps a debit balance. So realize the brought down is on the debit side. Then we come to the sales account. The sales account also keep a credit balance. So we balance it up. We balance it up here. And so the balance carried down 1,000. Then the balance brought down 1,000 in relation to that. 1,000 in relation to that. So that is it about that. Do you have any question in the chat? If you have any question, put them in the chat box so I can answer your questions for you. So if you have any questions, put them in the chat box. We're looking at double entry in that case. Then the last thing is the how do we call it? The drawings account. So you can see from the sales account that we are having what? A credit keeps a credit balance in relation to that. So the drawings account is also 30. Drawings is more or less like a loss to the organization, and so that also keeps a debit balance. Now remember what I said, drawings is where the sole proprietor or the owner of the business takes part of the business's money for his personal use, okay, for his personal use. So balance carried down is going to be here 30, and then balance brought down will be here 30. So this is how we deal with the issue about the double entry. Okay, so I see a question from Prince Arno. Sir, please, what was the last time CA set question on double entry? Okay, that is level 1 financial accounting. I cannot just call that off head, Prince. I would have to just cross check and see, but I've not really looked at that for some time now, so I cannot just answer that straight up. The reason is that it's been a while since I thought financial accounting ICA level 1, because now I focus more on the level 2 and some of the level 2 papers and then the level 3 papers. So unless I cross-reference before I can answer that question. But this is the bedrock of financial accounting, the double entry principles, the double entry principle. So this is the first question. Any other questions you have, please put them in the chat box in relation to that. And you can send us a message, and you can look at the chat box 050-114-9296, 050-114-9296, 050-114-9296. You can send us a WhatsApp message for anything. Maybe you would want to get a question, or you have some inquiry for us, and we will be out to answer you and also assist you in order to prepare well for your examination in relation to that. So this is what I wanted to discuss with you, go through with you today as you prepare for your examination in relation to that. I believe that it was a fruitful thing, and thank you very much for joining the broadcast. I'm going to be concluding somewhere around here today, and God willing, tomorrow we're going to be continuing with our discussion, continuing with our studies in relation to that. So thank you very much for joining the broadcast. Remember to become a VIP member by subscribing to the channel, and also share the channel with your colleagues and your friends. We want to reach as much people as possible. Schools have shut down, and students are not having access to learning materials, and we want to be able to become the gap, so that we will be able to bridge the gap, become the bridge for the students, so that they can cross successfully to the next level in relation to that. So keep on following, keep on sharing, and keep on supporting what we do here. We love you so much, and we will not be here and be doing this without you. So thank you for your regular support, and thank you for being with us all day and all time in relation to that. Check the playlist and check the channel page as well in relation to that. So I'm seeing a question from Prince Arno. Let me see if I can answer that real quick. So Prince is saying that So please, I want to purchase some of your question. Let me see. So please, I want to purchase some of your question tag. Purchase my question tag. How? I don't get it. Like I said, you can send us a message 05011499296 to request some of these questions, and they will be sent to you in relation to that, so you can practice them and also look at them in relation to that. Basically, for the level 1 issues that we have, it's not something that we are selling or giving out in that case. So we are selling out of that. So you can just send us a message and you should be able to get that in relation to that. So Prince, you can send us a WhatsApp message 05011499296 05011499296, and you will be able to get access to some of the questions will be sent to you, and you'll be able to use them for your studies in relation to that. So thank you very much for joining the broadcast, and I'll see you same time tomorrow as we continue with our journey. I'm going to be touching on something else tomorrow in relation to that. So if there are any questions, you know what to do. Put them in the comment box in that case, so that I'll be able to answer your questions for you. So thank you very much, and I'll see you same time tomorrow as we continue with our journey on the ICA, ACCA, summer, and all the examinations as much as possible. All the best and happy quarantine.